Hello, welcome everybody. This is going to be a really quick Facebook Live update from the StashAway team. My name is Philip. I recently joined StashAway in the partnership function. I have extensive background in the wealth management business as well. And with me I have our Chief Investment Officer, Freddie Lim. You want to say?
Hi everybody, thanks for dialing in.
So today we wanted to address really quickly a couple of the noises that have been, coming up in the market. I'm sure you've seen the news, or your friends have been telling you that the market is on a roller coaster ride, up and down, both at the same time, maybe even. But in order to make a little bit more sense of that and what's going on in the world, I want to just quickly share with you some of the things that we've been observing. So with that, let me just start with kind of the first question. And by the way, if you do have any questions at all, feel free to put them in the comments, and we'll be sure to get to them throughout this quick Facebook Live. So Freddie, so let's start with that. What actually just happened?
Very good question. Thank you for that. What we have here, firstly, is a classic pullback from something called FOMO, F-O-M-O, fear of missing out. As you remember, in January, we had some of the best months. And that's a lot of it is driven by a lot of fear of not joining the rallies. That sort of kind of create a situation where after everybody has bought into the markets, who's left? So the classic pullback is actually quite substantial. What we're seeing partially is that. And the more important current that's happening since then is also another angle with the US dollars. If you recall, we have Trump and Steve Mnuchin at Davos talking down the US dollars. There's a lot of trash talk and posturing going into upcoming trade discussions with China and fellow other countries. There's a lot of fear in the market that this may out of control and become a global trade war. And in a global trade war situation, a weaker dollar effectively forces a tightening of monetary conditions in countries with peg currencies, floating currency regimes. China has a peg currencies, Hong Kong has a peg currencies, Singapore has a managed flow currencies, Malaysia, Indonesia. So the impact on Asia is not insignificant, and it's generally not a positive development in the near term. So this would be my two main reasons for what's happening right now.
Yeah, and you're echoing what I've been hearing as well, right? And basically then, with all these things being said by you now, a lot of clients, like questions have been coming up, right, about this. So what can we tell them that StashAway has done, in those terms?
To be clear, we're not going to do anything about it. It's not like we're not prepared. As clients of StashAway, you may know that in December, we have done a so-called re-optimization, where we re-optimize the portfolio, taking into account what's happening in valuations. When the stock markets were overvalued, so StashAway system automatically recognizes the undervaluation in protective assets, such as gold and certain other sectors. And we have actually increased allocations for our clients to precious metals such as gold, which has performed 0.25% positive over the last 3 days. This is actually an additional protection to what we have been doing so far. As you know, StashAway has a bond-heavy focus. TLT, the bonds in greater than 20-year maturity, has actually done 0.96% for the last 3 days. It's on our portfolio. TLH, 10 to 20 years, done 0.86%. It's on our portfolio. So at a certain level, there's a lot of preparation that's been going on at StashAway, and it's a systematic process. We are very risk-focused, and it's always been, so we're not caught surprise. At a different level, some of you may have raised this topic before, which I think is a good time to clarify now. StashAway has intentionally designed a certain amount of portfolio to be exposed to the US dollars. Depending on the risk point, you have about 40% to 48% of your portfolio exposed to US dollars. The main reason is that in times of trouble, the US dollars the Japanese yen, and the Swiss franc, major funding currencies in the world, they tend to outperform every other currencies whenever there's a global systemic market corrections, exactly like this one that we have. In 2008, during the market rout, dollar Sing has gone up 13.5% between July and November of 2008. So as StashAway, we actually seeing a 0.76% of offset in returns, in risk reduction from being exposed to dollars over the last 3 days.
Okay, well, thank you, Freddie, for that update on kind of like what we have done so far and how we're actually like preparing people's portfolios for those kinds of events, right? I think it's really good to reiterate to our clients that as well, and kind of that's the starting point of how we built it and how we optimize them throughout the time, right? So with that, then, what is kind of your advice for all these people going forward? You know, I think with the noise of the TV and the news and everything, you hear a lot of like, oh, like people are worried that they should sell everything, right? For example. But kind of what's your advice for the people listening?
For one, the media is going to be very busy right now, crafting sensational headlines. And this is another Armageddon, end of the world situation. It always has been with the media. So they are it's very predictable. So my number one advice is, do not overreact to news flow. Stay focused on fundamentals, because ultimately economic factors drive returns. That's the more important advice. And lastly, I would say that you continue to, actually, this is a perfect time because a lot of us couldn't, the economy is still growing well. It's accelerating actually. But for the last 1 year, most of us couldn't really get into the market in a very cheap manner. It's been overvalued. This is the best time for you to let dollar cost averaging work in favor. Stay true to the long-term investment plan. Commit to what you have committed in terms of, say, monthly contributions, and let that weighted average comes down for you in the way you enter the markets. We're still growing. Stay invested in growth. Stay diversified. Let dollar cost averaging work for you. That will be my advice.
Yeah, well, thank you for this, Freddie. And I think, you know, to sum it all up and maybe like close this out, if we don't see any other questions from you guys, I think what you do see in those times right now with this much volatility, that volatility is actually the toll that every one investor in the world faces, right, in order to get the long-term bull market returns, right? And I think, quite frankly, one of the worst things that you can do as an investor is timing the market. And right now, time out of the market is probably the worst thing you can do, because those corrections, they're usually sharply down, just like what we've seen the last few days. There might be another couple of days of down days, but they go up just as much. And then you're having the same dilemma again by saying, oh, now I missed the downturn, now it's too high again, right? Just keep in mind your long-term goals, right? They're long-term usually. And with that, just, you know, add the money in, keep contributing, and average into the market, just like Freddie already said.
Yeah, and this is an opportunity. So stay true to your plans. And I don't know, stay focused, and good luck to all of you.
Yeah, and if you have any more questions, please feel free to add them into the comments, and we'll definitely address them and get back to you even in writing. If not, we can always, might always come back to you guys on video as well. Okay, thank you guys. Actually, what? I think we do get a question here.
Do you regulate your market entry? Is there a schedule or process?
Freddie, do you want to comment on this?
Okay, I think the question is, do you regulate your market entry? Is it a schedule or process? How we do about it? The short answer is yes. As your money comes in through the funnel, it goes through a certain checks and balances. But once you clear all that onboarding processes, the money will be funneled through to our brokers and a certain timeline and will be executed. However, StashAway recognized that during the day when we execute your orders, there could be market events like last night's. And we actually have an investment team that provide an oversight to the execution algorithms. So as for example, last night, the team has actually provided the same oversight. We have held back on the orders. We have actually waited for the momentum to subside before we actually execute long orders for you. So as such a way, I know that we can go fully automated, but that's not what's happening here. There's an investment committee that's on top of this algorithm, and it's a joint oversight that we provide. I hope that answered the question. I think there's also a bit of comments about if there's volatility such as Friday, do you hold off entering the market? And yeah, exactly. We will hold off as per during the day, but the orders will have to be executed within the same day, because in principle, we have to stay true to the long-term sort of investment principles. It will be executed on the same day regardless of market conditions. But what we can do is during the day, we have this oversight where we would store the algorithm and we would try to get the best price for you within that day.
Yeah. Actually, we'll stay a few more minutes because I think we actually are having still people join. So I want to make sure that if they do have any questions that they either maybe not have heard us talk about, or if they do have any additional questions, so that way we'll get to them as well. Just hang on with us here for a couple of minutes.
Well, in the meantime, I would just like to comment that this is not unusual. We have seen this many times in our career. I want to also introduce Philip a bit more. Philip is someone who has immense experience, having understudied with legendary investors such as Ken Fisher, and he's a very successful serial entrepreneur himself, having invested very actively. So, it's our view collectively that you need to stay focused on economic data, which is actually good. They're very firm, they're accelerated. Markets such as this is an opportunity for you to do dollar cost averaging. That fundamentals does not change regardless of what's happening, regardless of what the media is saying right now.
Yeah, and I think the media is always very trigger happy when something happens, right? It gives them headlines, and I think making sure that investors stay the course and not get panicked. That's always the very important aspect, right? I think in my old roles as a wealth manager, they actually called our role investment counselor, and I think that's actually more fitting than wealth manager, because what we did a lot is counseling people through these events, right? And I think that's kind of what we wanted to have this forum about.
Exactly.
Kind of like sharing those things that you make the right decisions and not believe in all the hype that is always happening. Rather take this as an opportunity to get into the market or add to your positions, whatever that might be. Yeah. So is there any more questions? No? Then I think we'll wrap it up at that. But again, feel free to comment on the video below, and even if you are listening to this at a later point in time at the recorded version, then feel free to ask more questions and we'll get to them.
Well, before we close, I just want to say Stashaway is always here for you. We are a systematic automated platform, but there's a lot of human touches. Please feel free to engage our customer engagement teams, WhatsApp, emails, phone calls, with any concerns, right? We're here to provide advice. It's not just a black box. There's a lot of human touches, especially in times like this. Please feel free to engage us. With that, thank you for dialing in. I bid you a good day.
Thanks, guys.